Howdy, who all my stock market gamblers? Welcome today. I'm Tall Mike. So glad you're here. Well, what we got going on in the markets? Well, still trying to make the top, right? The topping pattern. We hit the high back in July on the NASDAQ, and now we're back to a double top right around 500 on the QQQ, and I am short the QQQ, short at 498. It may push above that. We'll see how that plays out. But right now we just have this topping pattern. We're waiting to see if the market can explode higher, like a lot of the moon boys think. They think we're in a crack up boom. They think we can double from here. And it is possible. I'm not saying it's not possible. I'm not saying I'm right. I'm just saying I'm taking a shot to the downside. Now, I do have a large position in gold. I do think if we get the crack up boom continuing, gold will be leading the charts. This is just my take. A lot of people disagree with it. Anyways, let's get over to another part of I want to talk about today, which is the financial system. Now, I think the financial system is going to collapse. I think it's actually a war out there in the financial system. You see, now I'm putting on my tinfoil hat here. This is how I would do it. Nobody's going to break the United States by coming in with weapons and fighting us in a hot war. It's never going to happen. How they're going to break the United States is with a financial war. Now, if I was going after the United States, I'd go after their banking system. I'd go after their financial system. Now, how would I do it? Well, the banks, they're in trouble, right? The banks are in trouble. They have the commercial real estate loans that are underwater about 50%. The banks have already lost about 30 to 40% of your money by putting your money, you deposited your money, they bought bonds, the bonds went down, they're underwater in the commercial property. Now the debt is starting to creep up on people. A lot of credit cards. Credit cards are at a record high and people are not making their payment. They're defaulting on their credit card debt. So the banks are losing money in many different directions, right? But here's the thing. I always thought the debt bubble was going to pop, and that's where this downfall would start. It's not going to start in the stock market. Don't watch the stock market for when the big collapse happened. The big collapse is happening in the debt market. That's what I always thought. But here's the thing. It may actually happen somewhere else, and I want to talk about that in a second. But let's talk about the debt bubble. First of all, we're $36 trillion in debt. And that doesn't really piss me off that much. But what does upset me is the fact of what we got for the 36 trillion. Now, back during World War II, right after World War II, we went into a lot of debt. We rebuilt our country. We rebuilt the infrastructure. We went into debt to do that, and then we boomed and we paid off the debt. But what are we getting for our debt right now? What do we get for $36 trillion? Well, you see, what we got is they printed $36 trillion, and then they handed it out to people to not work, to stay at home and not work. During the crisis, the pandemic, we printed an extra $30 trillion, basically, to finance our government, to finance the people staying at home and not working. And now that's all behind us, right? But what do we got to show for it? Do we have better roads? Are our bridges safe to even drive across anymore? Look, at our infrastructure is not that good. Our airports can use an upgrade. We did not spend the money to get anything. All we do is hand the money out to the corporations. We hand the money out to other countries around the world. We pay people to stay home and not go to work. We pay the new arrivals, the newcomers. We give them health care. We give them medical benefits. We give them a place to live. We give them shelter. We don't get anything for our money. So we're going farther and farther into debt, but we didn't get anything for the $36 trillion. And that kind of tends to upset me, right? Now, I thought the debt bubble is where this whole crisis would start, but I think it's a war out there, and I think it's a financial war, and I think they may be going after our banking system. I think this whole problem may start in the silver market. Now, people go, what's going on, Tall Mike? Why would the silver market be where this whole downfall starts? Well, here's the thing. Here's the thing. You got, for every 1 ounce of silver, you have 400 ounces of paper silver. This is things like the SLV, right? Okay, that would be paper silver. Now, the banks, they created these instruments. SLV, owned by JP Morgan, I believe that's correct. I'm not 100% sure of that, but it's owned by the banking system, right? And it's paper, and they want to swat down the price of silver. And that's what they've done, artificially keeping the price of silver low. Now, there's a lot of, once again, my tinfoil hat, I would say that the reason they're keeping the price of silver low is for the military-industrial complex. In the military, they use a lot of silver in their weapons, in the bombs that we blow up people around the world. To make the bombs, we need a lot of silver, and we need that price low to be able to afford to finance the war. Okay, so we got the system manipulating the price of silver low, right? Okay, so a lot of people, now this is funny, I gotta tell you this one, this is good. I always love the comments, I read each one, but anyways, when people explain to me how they cannot buy silver because it's the worst investment in the world, because in 1980, it was $50 an ounce, right? And what's the price today? $32 an ounce today. What, 50 years later almost, right? 45 years later, we're almost at half of what it was back then. Back then, it was the Hunt brothers tried to manipulate the market by cornering the market, tried to manipulate it higher. They actually went bankrupt trying to do this, right? By trying to corner the silver market and pushed it up to $50, and now it's $32. So if you bought in 1980, the gentleman's correct, you would be down, right? You would be down in nominal terms, not even inflation adjusted terms. But what the gentleman fails to see is what a bargain silver is now. What a bargain it is at $32 an ounce, right? And I believe it's going to get above 100, probably above 500 even. That's my take. This gentleman will never, ever buy an ounce of silver. And that's good. That's perfectly fine. I don't mind that, right? But maybe I can help you guys see the value, see the bargain of a lifetime in silver at $32 an ounce. And maybe I'll persuade some of you that this might be a good thing to look into. And I don't care if you buy it or not. I really don't. I don't sell silver. I don't have anything to gain by telling you this. I'm just trying to enlighten some people, right? It's just what I'm doing. I got a big stack of silver, a big stack of gold. But silver was $50 an ounce, and now it's $32 an ounce. Now, here's the thing. Okay, so the banking system, they have somewhere between, let's call it around $6 billion. 6 billion ounces. 6 billion ounces of silver short. They're short 6 billion ounces. Bank of America is short a billion ounces of silver. This is silver that they sold. They don't have the silver. They are going to have to buy this back, right? Okay, so now what's happening at the exchanges? The CME and the London Exchange, they don't have the physical silver. Who's taking possession of physical silver? Right now it'd be China. Right now it'd be Russia. As a matter of fact, China goes all around the world buying from miners directly, so they don't even get recorded the number of ounces of silver that they are stockpiling. They are stockpiling all the silver. Silver is disappearing. We do not have silver. The exchanges do not have silver. If a billionaire comes in and buys a bunch of silver and he wants to take delivery, it will break the exchange, right? Now, when it breaks the exchange, what would happen to an ounce of silver? Well, you could multiply it. You could multiply that $32 by the 400 fake ounces of silver, and you'd come up with a number around $12,000, right? Now, I don't think silver is going to get as high as $12,000, although it could get as high as $12,000. But when the exchange breaks, and it will break because they do not have the physical silver to deliver, it will skyrocket the price of silver. When the price of silver skyrockets, what happens to the banks? They're short position, 6 billion ounces of silver short. If silver were to go to even $300, even $100. It is going to break the banking system. When the banking system breaks, the whole financial system collapses. Now, this is how I would be going after the United States if I was China, if I was Russia. I would be going after the banking system, and I would break them by cornering the silver market. See, the Hunt brothers tried to corner the silver market if they didn't have enough money to do it. Believe me, China and Russia have enough money to corner the silver market. And when they corner the silver market, the exchanges will break because they will not have the silver to deliver to the clients. Silver will multiply many, many times upwards, right? And the banking system will collapse downwards because they're short 6 billion ounces of silver that they will have to buy back at extremely higher prices, right? So this is how they could attack us through the silver market and cause a total financial collapse. Now, okay, a lot of people laugh at me when I say silver. 500 ounces of silver is going to get you the average price home. People they say I'm crazy, right? Okay, here's the thing. Let's talk about this. Silver comes out of the ground at a 7-to-1 ratio between gold and silver. Now, gold, it's really about 3,000 ounces, but let's use 2,500 because I like simple math. Okay, now every time the Fed pivots, the Fed just pivot, gold doubles. Doubled in 2000 when the Fed pivoted, right? Gold doubled in 2008 when the Fed pivoted. Doubled in 2019 when the Fed pivoted. The Fed just pivoted. Gold is going to double. It's going to go from 2,500 to 5,000. Now, I think gold's going to do a double, then double again. And he's going to go from 5,000 to 10,000 after it goes from 2,500 to 5,000. Now, if this plays out, at gold, the silver rate comes out of the ground. It's mined out of the ground. It's 7-to-1. I'm going to use 10-to-1 because once again, simple math, right? So, okay, let's say gold does get to what? Gets to, well, $5,000, okay? And let's say that the system kind of collapses, right? The exchanges can't meet delivery. Well, silver will then bounce to at least a 10-to-1 ratio with gold to silver. So when gold's at 5,000, silver is going to be at 500. Now you multiply 500 times 500 ounces. That's what I'm saying will get you the average price home. That'd bring it to $250,000. Now I do think the average price home is around 400,000, but I think it's going to come down by 40% when the system breaks. So it'd be 250 to 250. Now let's say the system doesn't break. Let's say gold doubles and then doubles again. So it goes 2,500, 5,000, 10,000, right? So you're at 10,000. When you go 10-to-1, gold to silver, $10,000 gold, you're going to have $1,000 silver. $1,000 silver times 500 is $500,000. Now, even if houses go up in nominal terms to 500,000, you're going to have 500,000 and 500,000. You're going to be able to trade 500 ounces of silver for the average price home. This is just my take, right? You do whatever you want to do, but what I've done is anyways, for every 500 ounces I put away of silver, which is about, let's just call round numbers, $30 an ounce silver, 500, you're looking at what? $15,000. You take $15,000, you put it in silver, you put that away until the system breaks, until we're getting attacked maybe by Russia, maybe by China, and they break the system, they break the banking system, and silver reverts to its true value, right? Right? They don't have that 6 billion short ounces. They have to cover. Silver all of a sudden becomes between 500, 1,000. And yes, I do believe silver could go as high as $12,000 an ounce. Crazy, right? I'm talking crazy stuff on a Monday. But this is what I think in my head. This is a tinfoil hat thing. This is what I think is going to happen. This is how I think it's going to play out. I think we will be attacked in the silver market. They will corner the silver market and the banks will get short squeezed, right? I mean, the 6 billion ounces short, they're going to have to buy that back. If they have to buy that back at $1,000 an ounce, you can do the math on that 6 billion. This is pure loss for them, pure money loss, right? And they're going to go under. The banking system is going to fail. Your money in the bank's really not that safe. I say just have as much money in the bank as you're willing to lose. Now, how How much do you want in gold? How much do you want in silver? Just the money you want to multiply. Because I really think it's going to start to multiply when this happens. Now, nobody wants to hear about this. I get that, but I'm telling you, silver is the best buy ever here. That gentleman told me it was $50 in 1980. Like, Tall Mike doesn't know that. Yes, I know that, right? And if you were buying it then, you were pretty naive, pretty dumb. But down here at $32 today, 45 years later, you are a genius if you can find some to buy. They're going to run out of it. You're not going to be able to touch this once the system breaks. This is just my take. If you like this stuff, give me the thumbs up. It's a Monday. Get out there, everybody. Have a great day. We'll talk again real soon. Bye-bye now.